to list the shares of these dealer broker crypto exchanges. So I consider that all positive. All positive. But I think right now we haven't found a bottom yet for crypto.
In this interview, Kevin O'Leary talked about how the institutional investors have become more interested in Bitcoin after the recent crash. He then talked about his predictions for Bitcoin and mentioned a new bottom for it. He also talked about why he loves Bitcoin and crypto so much, and then gave some really important advice. Also, I'd just like to remind you that we're giving away $100 to a random subscriber at the end of this month. To participate in it, you must subscribe to our channel, turn on post notifications, like this video, and leave a comment in the comments section below. Good luck. Now, let's look at his interview.
There's lots of precedents for this in history. To get a bottoming in an asset class, you need a major player to basically be offside. In the case of Celsius, it is going to go to zero. It's over-levered. It's gated now. And the trouble with gating, a good example would be a hedge fund. Every single customer wants to be liquid the minute you open the gate. And so it's a self-realizing outcome. It will go to zero. It'll have no assets. But that's important. It's not enough. It's not big enough. I'm looking for something bigger. Somebody out there is in trouble. We don't know who they are yet. We'll find out soon. It'll probably happen in the next 30 days. Some giant player is going to zero because this is the first time applying leverage to an asset class that most people assumed wouldn't be this volatile, but has proven to be volatile yet again. And I say all this, and it's important that this happens. It's bad for the individual investors, but in the context of making this market more educated, more institutional, more stable, with better price discovery and less leverage, you need these players to go to zero. So Celsius, thank you for your sacrifice. They'll go to zero, but they're not big enough. They're a small bit player doing something really bad, using leverage to offer 15 to 18% staking, which of course is going to go to zero. But that's okay, because now other investors, after watching what Celsius did or what Luna did, will not favor those structures. They will not put new capital to work there. Market's very smart that way. So by creating these events, taking these to zero, that gives you the, this
Terra
is
Luna is like 60 billion, including UST. Terra Luna, they was 60 billion, and now they're
I know
zero.
that
That's
sounds
a big player.
I know that sounds like a lot, but in the context of financial services, that is nothing. Even the entire, under $1 trillion crypto market is nothing. We need, it's really small in the context of where it could go. And so what we need to have happen, and the interest is, I was just, before I came on with you, I was just talking to institutional investors in the Middle East. There is so much interest in getting into crypto right now, and they can't do it because they have no policy and they're not compliant because they're sovereign wealth funds. And they don't have the option. They have no infrastructure for compliance to buy Bitcoin. And so they're really interested in, putting 1% to 3% into Bitcoin, which is the granddaddy asset, given that it's had such a price correction. They're very interested. And, what does that mean in terms of demand? Well, if you're running a $900 billion sovereign wealth fund, that's a lot of demand. And so we don't have that in the market yet because we don't have policy. So when anybody says to me, oh, we want to remain unregulated, they don't get the joke. We're going to stay small and tiny and fractional. Under $1 trillion of assets is nothing. It's nothing. It could be multiples of that if we could finally get some policy. But we need two things. We need that capitulation event, and I'm sure we're going to get it, and that's a very good thing, and I've given you the reasons why. It'll be chaos in the streets kind of thing. Bitcoin will probably drop down significantly. I don't know, maybe another 20% down. Who knows? It's impossible to know. But again, it's a good thing. It's the beginning of a bottoming process. Then we need one of these bills that's floating around Congress right now, and I would suggest the one that I'm most interested in is the simplest to pass. That's going to be the Haggerty or Toomey bill that contemplates auditing stablecoins, which is a really easy thing to do and would make it much, and if we just could get some policy on one thing and it was stablecoins, that would really be good because you would start to know with certainty that you get some movement from the institutional client to allocate. And I'll give you an example. You mentioned WonderFi earlier. Yesterday, WonderFi announced, it's all over the papers up in Canada, that the TSX, the premier exchange there, invited them to list on the TSX. The first time in history a crypto exchange with a dealer broker attached to it has ever been invited onto an institutional exchange. And the reason they did that is there's so much institutional demand in Canada for product. There's a huge amount of demand, and the regulator in the Canadian market is a little bit more advanced than what we have stateside. The UAE is very advanced as well, Switzerland, England. These are other countries, Australia, where you're a little more advanced on policy, and these large institutional equity exchanges are asking to list the shares of these dealer broker crypto exchanges. So I consider that all positive. All positive. But I think right now we haven't found a bottom yet for crypto. The long-term capital, the one I keep referencing, was the bottom of the market when that thing blew up. It blew up on leverage, and it was chaotic. I think we'll get a couple of hedge funds. If they're big enough, they'll be considered, catastrophic events, and that's the market always goes on. If something blows up in crypto, it doesn't end crypto. The promise of crypto remains, but we really need it to get that bottoming process started. We're not there yet. We're in the slow grind down. Every day down another 2.5%. It's very painful to watch. What you want is that toilet to flush. Okay, if we have to go down 25% more, let's do it. And then it's a huge buying opportunity for those that have this stamina to take that kind of volatility. And then you reflect on it 18 months later saying that was the bottom. It's always around an event. That's all I'm saying. I'm just being a student of history. And it's going to happen. You will be reporting on it. You will be reporting on it. You'll remember this conversation. It's coming to a theater near you. There are 3 bills to consider. And they're all bipartisan bills, which is very good. The granddaddy bill, the behemoth 175-page if you want to call it crypto infrastructure bill, is Cynthia Lummis and Gillibrand. So a Democrat and a Republican proposing infrastructure across all asset classes of crypto, contemplates everything: Bitcoin, Ethereum, blockchain projects, you name it, NFTs, stablecoins. That's out there. And that is a very big bill. It's assumed that it'll be split into 3 pieces when it gets tabled sometime after the midterms. That's bill number 1. That's the big one. Number 2 is the one that I think gets passed first. It's going to be the Haggerty or Toomey bill, which are identical. All they say is, let's pick one thing. Let's pick stablecoins. And the reason they want this bill and why both sides are interested in it, it contemplates a stablecoin backed by the US dollar, therefore creating the default currency of the globe. If this was adopted by multi-jurisdictions, so let's say a USDC kind of stablecoin, there'll be more than just USDC. If this policy is passed, it would simply say you can create a stablecoin backed by the US dollar as long as we can audit it every 30 days with total transparency, and you have no assets supporting the coin with duration more than 12 months. Very simple idea. And that's no different than policy on an FDIC insured money market account in Fidelity or Schwab, for example. So the same thing would apply here. Now, if you wanted to be FDIC insured and you were issuing a stablecoin, you'd have to turn yourself into a bank, but that would also be permissible. So when this happens, you're going to see a bunch of players emerge and say, okay, I'll live with that regulation. And then I, as an investor and a corporate investor, an institutional investor would be the same, would say, well, there's slight differences between Schwab and Fidelity's money markets or Oppenheimer's money market fund, but they're all backed by the FDIC insurance. So I'm going to put a portfolio out a third. I'm going to have all of them. And so that would be the first thing that would be a very good thing for the crypto market. And I think that can happen in Q1 of next year. And so I'm very supportive of those bills, very supportive of those senators. Many other private citizens are the same. I'm not the only person going to Washington each week. It makes a lot of sense to me, and it's in my best interest because I want those products for my financial services investments. I would like to use a USDC-like product for payment systems between my companies in different geographies. Makes total sense. So there's a real motivation, and the senators and the politicians love the idea of making the US dollar the default payment system. It makes sense for everybody. So that's very important. Celsius is acting on its own in the free market under the regulations that they started, and they decided to pursue a leverage strategy. They decided to put extreme leverage on, it looks like. When it came time for a liquidity event, they weren't able to provide liquidity. And the history of that, the concept of gating, shutting down, is completely, and you noted it earlier, this is completely against the concept of decentralized finance. I mean, If I had an account in there, I'd be a pretty pissed off cowboy right now. And I'm glad I don't. But the philosophy in our shop is we don't use leverage on highly volatile asset classes, whether it's crypto or whether it's, small cap or venture stocks or whatever it is. We just don't use leverage because we don't know with certainty what's going to happen any one day. When you use leverage, as Celsius did, to provide those extraordinary yields for a short period of time, I think everybody went into it with their eyes open, so now their accounts are worthless. That's okay. I keep saying it. It's a birthing thing. It's the beginning of a nascent industry. The bad ideas need to be weeded out. It's taking the cancer out of the system. It's important that they die. It's a good thing that Luna went to zero because no one's going to do that again. That's the whole idea. And just because
Tron basically did it again.
Justin Tron.
And like 5 later.
No, but you understand my point of view. I think you understand my point of view. You've got to scrape the patina. You've got to strip the Band-Aid off the wound. This is all good.